Hi, this is Jeffrey Cohen, and I want to talk to you today. It's week 28, and I am the president and founder of Chicago Quantum, which is a business owned by U.S. Advanced Computing Infrastructures Incorporated. We are an Illinois corporation. We are founding members of the Quantum Economic Development Consortium, and we run and own a model called the Chicago Quantum Net Score that looks at all stocks in all listed stocks in the 5 stock exchanges. We run it every week, and we learn a lot about the market, and we share some of that information out on social media, and also, of course, for paying clients. We'll run a detailed analysis just for them. So, want to start by talking about these are rocky shores in the market. It's been a tough market this week. Caused a lot of people I know a lot of pain, and so I want to talk a little bit about that. What does that, Jeffrey? What does that look like? And so we're doing this video today earlier in the day on Friday, so you have a chance to maybe act on it. So if we take a look at the full market, not so much for the day, but let's look for the week. And you see, it doesn't look bad. The biggest stocks tend to be green. By the way, biotech is red, energy is red, leisure, travel, resorts, packaging is red, right? Software is red, but in general, the big stocks are green. And take a look at biotech, though. Biotech fell on the floor this week, and I don't know that we even have any insights, but we can talk to you about it a little bit later. So with this context, I want to talk about what most people are seeing in the market, because the small caps were down significantly. So we're going to start with, we run a model, and we published, it's interesting, we went out on Medium, and we published the 20 dogs, the 20 stocks that were the most inefficient. It doesn't mean necessarily they're going to go down right now, but it means that these stocks have volatility that is very high, and there's really no or limited correlation to the overall S&P 500. So they're acting as independent agents. So let's take a look. This is just today, and these were published on the 12th. And there's a couple up, right? There's 4 up out of 20. So basically, if you got our run, or if you looked at our Medium article and you saw these and you invested $1 in each of the 20, 16 of those $20 would be working in your favor, would be dropping. And so, and you can see Marin software, heavily memed, is down to $9, and much further to go in terms of the 52-week range. But a lot of these stocks are starting to drop to the 52-week low. They've fallen, right? And so we called them. They're extremely volatile, and just always interesting, right? And so I'm just going to flash up for those who are watching. What are our long picks for the week? You're not supposed to see these. These are for paying clients, but I track them. And you're also going to see that our up stocks, or our long stocks, they're also pretty down. In fact, 16 of those are down as well. So these are stocks that tend to have very little volatility relative to their beta or their expected market return. So these stocks move with the market, but have very little volatility, or much less volatility than you would expect. And you see some weird names in there like Mara and Riot, and that's because they have so much beta that they can actually carry a lot of variance and volatility, and you can still make money. But you see stocks are pretty down. The good news on these is the drops are pretty small. They're all less than 2% for the day. The ups, again, around 2%. So these are going to move a little bit less. So just something to think about, right? The market is not loving small caps. These are generally small cap stocks that are maybe light on volume. So, and if you look, most of these stocks are low volume stocks today. And so, maybe with the exception of Tesla. Can you believe we've got Tesla in our model? So Tesla's being picked. It's down 1%. Interesting. I told someone this week, do not short Tesla. He said I was being emotional. But the model is picking Tesla as an efficient stock. Bonds. So, we like to look at the bonds this week. So, a huge inflation scare. Inflation read was like 5.4%. Crazy numbers on inflation. Now we, Chicago Quantum, believe that inflation is transitory. What does that mean? It means it's driven by energy prices, used car prices, certain specific elements of our market. Now the thing with energy is energy pervades through things like food, because you buy food at the grocery store, there's a truck that gets it, or a train that gets it from the field to the processing facility to the wholesale distribution facility and then out to the retail establishments. There's a lot of trucking and logistics, which has become very, very expensive. Same thing with retail, by the way. You see a lot more price inflation specific to logistics. So we take a look at one of our favorite things, which is CCC rated or high yield constrained, and we see that those rates have not risen. So this is still a risk-taking debt market. And in fact, what we saw, look at this, government indices, right? Year-to-date total return is negative. And these yields are tiny. These yields are very, very small. And so you're seeing very low yields in the market. And I can show you that somewhere else as well. The 10-year. So if we look at the 10-year over a year, right? You see, see if I can blow this up for you. 10-year for the year, and I'll compare it to Bitcoin. It's funny that there's a correlation between 10-year money and Bitcoin. I don't know that I'm comfortable with that, but it just is what it is. And you can see that 10-year money, that's not over the year. This is over like 2 months. Started over the year. So you can see how the rates rose, the rates are coming down. Bitcoin is just an exaggerated, almost mirror image of it. You can see it here on the 6-month chart. But by the way, you heard it here first. Bitcoin is moving with the 10-year treasury yield. It makes no sense. I'm sorry, but let's just play it out, see how it goes. Because that means companies like Mara and Riot are going to move correlated to the 10-year money. And so, but if you look, right, so yields popped up. Yields popped up a lot in terms of the yields were up 5%, not at 5%, but up 5% to the 1.4 ranges. But now they're down again. And so inflation goes up usually means the cost of money goes up because money held less dearly, it's worth less next year. You know, government, you got to pay me more. So I think this is very interesting. This is very bullish for stocks when treasury yields are dropping. It's probably bullish for stocks in some weird way when Bitcoin is dropping, although I think a lot of fast money is in Bitcoin and might be losing. And so less money to play in day trading and swing trading in the market. So treasuries are down, Bitcoin's down. Interesting, right? Bond yields are down or staying down. Okay, we had a chart on Bitcoin. Of course, you know, today it's looking a little better. It's up $81, but it's no. Now, if you look at it for the year, of course, wow, it was down quite a bit. It's up 250% over the year, but it's down dramatically. It was up 600% at one point for the year. By the way, that looks, if we were to examine the, yeah, it does. Yeah, it does. Another first, guys. I'm going to tweet this later. This, I believe, is a Head and Shoulders. Right here. Right here. Let's see if I can draw on it. Oh, my God. Head and Shoulders. So, you get your right shoulder here. Really here. And you see that volume spike? That volume spike is as it dropped to the bottom. So the neck is here, okay? This is the head. Okay, you see a volume, lower volume on the upswing, higher volume on the downswing. You got to have a volume confirmation on Head and Shoulders. Now we look at the right shoulder. Okay, I mean, it felt the neck. It almost hit the neck again. That's good to see. So here's the right shoulder. Now what's interesting is you got very little volume, which again is normal, right? The right shoulder, you're getting tired in the market. I'm tired. I've got no commit. But wow, look at that volume spike at the drop, at the breaking of the neck. I'm sorry, I don't mean to be weird that way, but This is the neck. This is the break. And you see volume spike right here. So the neck broke with conviction, and now we're seeing a downward trend. So I would not be long in Bitcoin right now. If you believe in head and shoulders patterns, you believe that this is going to keep dropping, which, by the way, is why even though our model loves Mara, loves it, loves Riot, we're not in. See that $24 a share? I'm not Jim Cramer here, right? But I believe that $24, I might get in at 18. Okay, I'm calling Mara to drop with the drop in Bitcoin that I predict over the next 2 weeks. So that's another thing. I should be writing these things down. So Bitcoin's down, yields are down. All right, let's keep going. Wow, that was very intense. I'm feeling a little flush right now. Let's look at NASDAQ. So, and I want to take Bitcoin off. So let's take a look at NASDAQ. And what you see here is NASDAQ, which is dominated. This is the NASDAQ 100, by the way. Dominated by 100 large cap stocks. By the way, if we go back to the FinViz chart and we go back to the S&P 500, you're going to see the big stocks are huge. Google, Amazon, Tesla, Microsoft, Apple. I don't know if Visa is in the NASDAQ or not, but these are stocks over the week that are really moving. They're kind of holding their own. Semi's down. Semiconductors are down. But so Oracle's up. Adobe's up. So you're seeing the biggest stocks are holding their value. This curve does not flatten. Not at all. Look at that. Since May, it's a steep upward climb. So this is QQQ, right? I believe in the QQQ. Now let's look at the S&P. By the way, I bet you're going to see the same thing. Oh, yes you are. Look at that. Holy moly. It's a straight upward climb since September of last year. The S&P is on a tear, okay? And even if we go a little closer, how close do we have to go before this thing isn't on a tear? All right, fine. You have to go like yesterday, this week. So this week is the first week we see kind of a topping. But this thing is like on a tear. You cannot assume that the trend is reversing. Dow theory folks out there, we're not saying anything. What we're saying here is this market is in a steep upward climb. It's up 40%, by the way, over the year. We know that because we produced that metric. The QQQ's up 40%. The Spider SPY is up 40%. The NASDAQ, the IWM or the Russell 2000 is up 60% over the year. These indices are on a tear. The only thing maybe that's going to be interesting is let's take a look at the 1 month on the S&P, and let's see if we can find a flattening. My guess is you're not. But let's see if we can. Let's see if we can artificially... is it a week? Has it been flat for a week? Has it been flat for a month? Let's get in there. This is a regression line that I like to use. So I let the system do it. There it is. So we're flat. We're down to flat. Basically this week. So it's been a tough week, right? So if you're in the market, there's no real volume change. What we should do here is we should not look at this. We should look at the spider because then we can get a relevant volume metric. 1 day. So sure, market fell at the peak. Volume was down a little. By the way, at the second peak, the closing peak was here. Volume's a little bit down. Volume's up. There's nothing here. There's nothing here, guys. This market is still in an upward climb. And so the question is why? The question is it the market's fine and small caps are down, or is it that smart money is consolidating in the largest stocks? We don't know, but someone's got to be writing this stuff down for me because I want to type it in later. What else we got? World markets. Well, now this one only shows for the day. I can go over to FinViz. So this is Yahoo Finance, by the way. We love Yahoo Finance. Thank you for being so awesome. So, for the day, for the week, let's see if I can take a look at the weekly range here. I'm not sure that's relevant. So let's take a look at percent change. So, I'm not sure what I could look at. Here it is. So, China's down, France is down for the day, Nikkei's down. It's kind of widespread. What's up? Hang Seng, Australia, Jakarta, Indonesia, Merval. I guess that's not Brazil. That might be Brazil as well. And the volatility index is up, which of course makes sense. We've been having a little bit of a crazy time. But, world markets are generally down today. Let's see what world markets look like for the week. I think what you're going to find, world's fine. Right? China's up, biggest stocks. Japan's up, India's up. Taiwan a little iffy. Australia looks good with commodities. Brazil's up. Mexico's up. So this was not a bad market globally. Israel's down. Tech stocks. So who knows? Maybe this is a tech issue. Small cap issue. But, most of these stocks are small cap. World markets are up for a week. World markets are up for a week. World markets are down for a day. So maybe by Friday they get tired. But so U.S. markets down for a week. World markets up for a week. Interest rates are down. Crypto's down. What's going on? There's just a lot of motion right here. So let's see if there's something you can act on. How's oil doing? Oh boy. So crude oil at the New York Merc, it's still over 70. Don't kid yourself, right? So looks like it's taken a little bit of a rest though. And in fact, I see head and shoulders everywhere. I love that pattern, by the way. It tends to talk to me. But let's take a look. The market's up. So oil and gas been up, 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 up. In fact, if I were to compare gas on here, natural gas. Natural gas. God, I don't know. I forgot. Gas. Come on, where's my gas? Henry Hudson. There it is. The Henry Hub. Gas price. It's not bad. Front month. Let's show it in gray. Non-committal. And there you see it, right? Gas peaked a little bit during some crises. Has been going up. Looks like it's hitting kind of a top. But when you look at oil, when you look at gas, let's just get them both around the same. You see the same kind of pattern. They're up. They're fading a little bit here at the end. So not a major thing, no. Not a major thing. I'm guessing the Nikkei is going to be down with the U.S. markets, but not for a while here. Yeah, Nikkei's not bad. If anything, it's declining a little bit. Nikkei did really well earlier in the year, and even looked like it tried to make a push there in mid-June. So overall markets, you got some tops, you get some issues, but in general, right? I'll look at the S&P 500 over the week. It's not so shabby. Energy's down. What did I say? You can see aerospace and defense. Looking a little mixed. Boeing, it could be a specific story. Biogen's down, but drugs are up. Mixed, a little bit of a mixed story. Our model was calling Verizon, and Verizon's been doing pretty well since it called it. So now let's take a look at overall. We've got 3 stocks. We have done a significant amount of due diligence on Akebia. So I want to talk about Akebia, but I'm going to start in order. So Satsuma fell off the bed. It really did. It's Satsuma. I have no idea what happened. There's no news. There's tiny volume here. Those volume numbers are way down. And it just decided to fall out of bed. Now, we're a long-term, we're buying and holding this baby because it's like all cash. Price to book at 0.95, price to cash at 1.41. The company, you're buying it almost for cash, a little more than cash, and you're getting a migraine drug candidate, phase 3 candidate, almost for free. Think of it as a call. You're buying it for book, and you're getting a call on the fact that they might have a nasal solution for migraine headaches with 2-hour pain relief. It's terrific if they got it. There's no news, there's no activity, so what must be happening here is one of the big investors must have dropped out. Only thing I can think of. And they're not dropping out all at once. They're being very polite about it. They're probably like letting out 10,000, 20,000 shares a day just to get out of a position. Maybe they got in when we started talking about Satsuma. Maybe they got in because they were a momentum play. People were trading 2.3, 4.8 million shares. There might have been a lot of kind of new fast money in there. Wrote it up from 5. That's when we basically were in love with this stock at 5, and it was great, right? And so they wrote it up to 7. They got nervous. They started selling at 7, selling at 6. They're even selling now at 5.90. And by the way, I don't blame them, right? No one ever went broke taking a profit. If you bought the thing at 5 and you sold it at 6, hey, good for you. You made 20 points. Remember to pay your estimated taxes so you don't get stuck at the end of the year. And go buy yourself some ice cream or something. You made money. I love it, right? But for me, I see this as a value stock, as a longer-term hold. I don't like when it falls, but I think I tweeted on it. It happens, right? Let's look at Corbis. Corbis is so fascinating. I don't understand the stock at all. So I got into stock when it bounced up, right? It bounced up. The model started picking it. Loved it, right? So I've got some good beta values. It moves with the market. It's a trend kind of stock. It's with the S&P. Even with QQQ, it's moving. But all of a sudden, if you look right here, it peaked at 223. It basically did a little bit of a double top, and then it came right through the double top. So I don't know that I'm a big believer in a double top, but there it is, right at 226. Boom. It has been falling since, what day is this? Since June 10th. Pretty much every day. I mean, there's a little bit of green there, but not really. No volume, tiny volume, falling through the floor. So, to me, this is not a fast money, slow money thing. This is a bleed. This is a long consolidation, bleeding out the weak hands. By the way, you know they're going to dilute because they need money to keep doing things. They keep picking up new drug candidates, new ideas. They've possibly got an obesity use for one of their cannabinoid drugs. Okay? Obesity, huge market in the U.S., probably kills more people than smoking. Obesity is a big deal, right? You create a pill, you pop once a day, and then you're thin. Great. I'm willing to try it, especially if it targets the triggers that are not voluntary. People are obese, not because they want to be. I mean, I had a good friend of mine. She was 350 pounds. Oh my God. My son is almost 300 pounds. I love him to death, but I don't think he sits around and eats 300 pounds worth of food because he wants to. I mean, maybe, but I don't think so. And I don't think it's education because you spend your whole life educating your son. I'm not fat. What's going on, right? What are you eating? Craves. So if there's a pill that takes the crave away, that's great. And so here's a company that is kind of like an early stage biotech with one late stage, lenabasum, which they're struggling to get through FDA approval. But I like the stock. And you know what? I do not understand why it keeps falling, right? I bought more at around $1.59, $1.57. I'm probably going to buy more at $1. I don't know. I don't know if it's going to keep falling or not, but you see that cross right there? That's the 20 crossing the 50. At some point, the 50 is going to cross the 200, and we're going to be in a death cross. They have to have news. There's no news. So now let's look at Akebia. And Akebia is a totally different story. So Akebia Therapeutics has one drug candidate and one drug that's making revenue. They're in the kidney business, right? And so chronic kidney disease. So one of the real tragedies of kidney disease is whether you're non-dialysis or dialysis, NDD or DD, you're probably going to pick up anemia. Your hemoglobin count may go down to as low as 7, which is normally like 10 to 12. So you're going to feel a low sense of energy. You're going to be tired. By the way, there's mortality risks, heart attack risks. It's awful. I don't even want to think about it, right? And so it's a big deal if you can cure anemia. And this is a physiological response. So Akebia is looking to make it like you're in a high altitude climate. Oh, go climb a mountain. Your body produces more red blood cells. Okay. So why doesn't everyone with leukemia move to like New Mexico? I don't know. Or the top of Mount Fuji. Maybe it's not that simple. But in this case, it's that simple, right? You take a pill. It's like you're in the mountains. But you don't have to leave your own home. And by the way, take a pill versus getting dialysis or a kidney transplant or having to get injections, right? There was a lady who testified at the FDA AdCom yesterday that one of her patients, right, she has to plan like weeks in advance to be able to go to the doctor because she takes care of her kids while she's sick and she's dying. And so it's nice if you can take a pill, right? And so they, there was good news. The thing was climbing. Again, we called it, the model called it. Anyone who follows a momentum play, a low volatility play, probably loved the stock. Took it to $4. Now, we didn't sell. If you sold at $4, God bless you, right? You made money. You probably got back in at $3.50 and you're feeling great. We're diamond hands here. And so we've written it down, and now it's flat. And the reason it's flat is because the FDA had an AdCom on roxadustat. So I'm going to show you the chart. FibroGen. FibroGen was the one that went through the model. And so FibroGen had a bad day today. It's down 44%, 45%. And that's because their drug did not get approved. Roxadustat is a competing drug with Akebia's drug. So the question is what's bad for FibroGen good for Akebia? The market's not sure. Maybe some of the risks of FibroGen are going to show up in Akebia. So, as you saw, it's not like the stock went up. It's not like the stock went up to high values. I mean, we don't have to talk about the euro. It just hasn't moved. Let's take a look at Akebia. Let's take a look at Akebia full screen 5 days. Booyah. So, people got pretty excited, right? The AdCom's coming. Boom. Drop like a rock throughout the day because a bad AdCom showing safety risks on a competing product could put a little risk on Akebia. Now, the good news for me is that one of their competitors is out of the way. They could theoretically be first to market in the United States, largest pharma market in the world. But, I sure hope their data passes muster. I sure hope that they didn't overshoot hemoglobin levels. So you hear me talking about things like hemoglobin levels, right? What happened? I spent 5 hours yesterday going through FDA analysis. Just want to show you. And I ended up stock twitting a lot of this data out for people. So you know what this is? This is the likelihood of not having an adverse effect. So if you took ESA, which is the old drug that has a warning label for adverse effects, the blue is roxadustat. So you are much more likely over time to have an adverse effect. This is one particular trial. I mean, it got voted down 13-1 for non-dialysis dependent. It was 12-2 for dialysis dependent. Right. But there's a lot of data you have to go through and a lot of things you have to learn. See, ESA is already a box warning. Increased risk of death. They were worse than ESA. So what's it going to say? Really increased risk of death? But you start going through the different trials. So how do you do a trial? What does it mean? What does it mean to have 4 different trials for NDD or non-dialysis? And why would you have global, which you should read China, Europe, and then DD, global, read China, maybe Japan, US, Europe. By the way, huge, but then they didn't even compete with the same stuff. Roxadustat against epoetin alpha or against ESA. The previous chart, you see that they competed with placebo or DA. So why did they do that? By the way, this was the largest study ever of chronic kidney disease for this type of drug. And, I mean, thank you, FibroGen, for spending all the money and getting all the data, working with all the patients. So, endpoint hemoglobin levels. By the way, the drug works. This is one of the things that, for me, puts a lot of goodness in Akebia's drug, because this concept of climb a mountain, make more red blood cells, it works. There's no question, by the way, by any of the people that the hemoglobin levels went up. And it's like 8,150 patients. It's a lot of patients, right? Then there's all this talk about treatment windows and why you got to do it. And so I'm just going to flip through these charts because there's so much data you have to know. The age, the adverse effects, why. So look at that. Death, 81 cases of death for roxadustat, 30 for the placebo. So not helpful. Please don't kill people. People dropped out early, all the different types of things. I mean, there were seizures that were really important. So, fine. But what was nice for me is now I understand the metrics of Akebia's number one competitor. 5.5 hours. Question and answer period. It was great hearing this. Oh my God, it was awesome. By the way, I forgot. I need to talk about Fed Chairman Powell's testimony before the House subcommittee. That was actually pretty important too this week. So someone better be writing this down for me. No, no one's writing it down for me. I don't have a secretary. I'm the secretary, but it's fine. So what's the deal with Akebia? I don't know if it's going to go up or down, but I'm very bullish long term that they have a shot at a good market here. So what else are we going to talk about? We are actually going to talk about some of the industries that really fell out of bed. So semiconductors fell out of bed this week. Airlines, banks, large diversified banks. So energy really fell out of bed. So why is this, right? So my first hypothesis this week was COVID. Let's take a look at the COVID numbers. Maybe it's COVID. Right? It wouldn't surprise me, right? We had a huge crash last year from COVID. So let's take a look at Google. New cases. Worldwide. All time. It's a slight uptick. It's not great. Slight uptick. We're not even close to the highs. 800,000. 900,000. We're at 400,000. I mean, it's still not zero, right? So if we look at United States, because I'm a U.S. guy, let's see what we see for United States. Yeah, that's a pretty steep climb. Let's take a look at 30 days. Yeah, that's not helpful, right? So 35,000 cases new in the United States. It was a high of 41. That's less than Illinois had on a bad day, but it's going up. Okay. Got it. That doesn't seem like enough, right? So, Chairman Powell, he gave a speech to the, I probably have it, 2 days ago. By the way, you absolutely got to watch this if you have a chance. Chairman Powell spent a really long time. He spent 3 hours. I watched the whole thing. It was amazing. Talking to the House Committee on Financial Services about interest rates, about monetary policy, about inflation, about all the details. And then you got to hear like a very regular person's view. And I was really impressed, by the way, with the level of question and answer given by the congresspersons. Very thoughtful, very insightful. Real questions that I might ask. In fact, one of the congressmen was calling in from his car dealership. And he's like, I love it. Now's a great time to buy a car. The used cars are flying off the lot. It's terrific. He goes, but let's be honest. It's a big deal and this isn't going to last forever. Why are the prices of used cars going up? And people in my voting district, right, they're struggling to buy food, but I'm making all this money in cars. So what's going on? And so, but it was great to see Chairman Powell kind of answering, ducking and weaving and staying true to his message, which is we still have an employment issue. We're not tapering. Rates are going to stay low. We're not tapering. We're still going to buy $120 billion. By the way, quit worrying about the mortgage-backed securities. It's just another bond. We're not doing this to drive up mortgage interest rates or drive down mortgage interest rates. It's just a monetary tool. And so, very committed, 3 hours of ducking and weaving, which gave me confidence that the Fed does not believe inflation is systematic. They believe it's transitory. They believe it's based on supply shocks. By the way, I was going to talk about the inflation numbers this week, but I did not. But if you go ahead, and maybe we'll do it next week, if you read the numbers, you can see it. It's CPI, right? So if you go to consumer, I just said I wasn't going to do this. Jeffrey, pay attention. Okay, June, 12-month percentage change. All right, 5.4% for all items. All items less food and energy, 4.5. That's high. But look at the energy inflation at 24.5%. Energy commodities are up 44%. So I would argue that this trickles through the whole economy. Full stop. And by the way, when you pay $1 more at the pump and you're a regular American, you spend $1 less at the grocery store or at the convenience store or at the Target or Walmart or whatever store you might shop at. I did this data when I was doing my PhD in management sciences. By the way, I never finished a PhD. I'm not Dr. Cohen, but I got through a good portion of it. By the way, straight A average. And but I studied this. It's $1 for $1. So there's less money going into other forms of retail because I got to put it into the tank. You know, I've got a big Chevy Trailblazer, and I didn't even fill it up because I didn't have $85 in my wallet. You know what? I put $60 in. I put in 2/3 of a tank. $60, $80, $90 for a tank of gas. I'm sorry. It's a lot of money. So, but when you look through the charts and when you look through the data, look at that. Energy's through the roof. So, I'm sorry, but I cannot answer that. So, I guess my point is, inflation, I still think it's centralized around energy and probably a couple other items, and that's about it. So, let's see, what else we want to talk about? So I talked about the Fed, I talked about COVID not being the big driver. Where else do we want to go? Well, I think we talked a lot about the markets. So here's what I'm going to do. I'm going to take you back to Yahoo Finance. I'm going to take you back to where are we with the market? We are at the S&P is down, the NASDAQ is down, the Russell's up today, but all week the Russell's been down. And so these are tough times for small caps. I think possibly some of this is due to options expiration that's going on. And all right, let's talk a little bit about inefficient stocks. Just want to talk a little bit about this. So, top 20 inefficient stocks picked by the Chicago Quantum Net Score. So, and I updated it today. So usually we pick stocks for clients that are good, that you want to go long. And you want to go long for 25 trading days because they have less risk and more return. It doesn't guarantee you're going to make money, but what it guarantees is if you pick a portfolio of 4 or 5 of these, and they are the portfolio that we gave you that had 4 or 5, then the volatility of your portfolio is going to be well below average compared to the potential return that you can gain. So you're going to sleep well at night.
There's dog stars, and they're the opposite. Those are the ones that are the most inefficient. So you're not going to sleep well. You're going to sleep awful, right? If you held 4 or 5 of these, if you held just one of these, it's going to go up and down like crazy. You might see a 10% swing every day or whatever, or like over a week. But your expected return is very small. So the reason you're in these stocks, you're a day trader, you're a meme trader, you're a swing trader. You want something that's going to fly, right? But you don't really want it to move. Because if you're short this stock, you don't want it to go up. You want to short it, and you want it to move a lot, and you want to buy and sell and buy and sell and buy and sell around a midpoint. So that's what we looked at. These are the top 20. And so one of the important things is we took a look at it today. It's been like 3 or 4 trading days. It's no big deal, right? And so we had an insight. These stocks live. They survive. They stay on the list through abnormally high volumes. Who would normally want to trade, just as an example, a REIT called RHE? It's an elderly home REIT. Nothing's happening. The people are staying in the home, right? I mean, what are they going to do? Open up a new home? Maybe. In a year? It trades almost 6 million shares a day. This thing is sleepy at best. Well, yesterday it traded 160,000 shares. Okay. So, of course, it fell. There's no gravity. Gravity makes these high-flying stocks, these meme stocks, these manipulated stocks, these highly traded stocks, these pulled stocks, and it takes them down. 160,000 shares. The thing all year traded almost 6 million shares, right? One stock's volume, PRPO, it's like a tiny company. It's a nothing. I mean, it's a great company maybe, but it's a small company that I think that installs equipment. Okay, you sell and you install equipment. It's fine. Probably makes 25 points of margin when they do a job. Maybe 30 points of margin with the stuff they sell, but all the overheads eat them alive probably, especially if there's low volume during COVID. So they normally trade almost 15 million shares a day. They traded under about a 250,000 shares a day. Volume decline of 98.4%. What is going on? Right? And so I bet you that stock dropped. No, stayed flat. No movement. Okay, so just take a thought on this, right? When markets, small cap markets start to dry up, when liquidity dries up, these dog stars are going to drop like a rock. And if you're in those dog stars and you're either short or you're long the puts, you have a really nice chance of making some big money when the market falls. So the persistence is a topic of interest of our followers. So we took a look at our dog star list over 2 months ago, April 10. 7 of the 20 remained on the list over 2 months later. So what does that say to me? By the way, here are the stocks. BTX, Chris, EQ, GBR, IGC, Kodak, KOTK, and MRIN, Marin Software. So, GBR I've talked about so much, I have a web page on it. These are just longer-term volatility over time. So, I don't know, maybe they're just day traders. Maybe this is like what the chat rooms make money at. They focus on these 7 stocks, and they just move all day, in and out, up a penny, up a dime, up a quarter, up a buck, down a buck, all day making money, right? Maybe. And we notice bursts of massive volatility, up $1, up $10, up $5 over time in these stocks. So we don't know, and you can't know just by running our model, or buying our model runs, whether these 7 stocks will continue. But it's just interesting that as you find a run, you buy a run and you find these 20 stocks or 50 stocks, that there might be a couple of them that keep day trading, and that you might decide you want to day trade them or you want to have a persistent long position on them. So I promised you I'd tell you my learnings. There they are. I want to thank you very much for listening. and being a listener. We had a couple people reach out this week, which really made me feel great. Who is Chicago Quantum? Chicago Quantum is an IT-based management consultancy in Highland Park. We were focusing and still focus on the quantum market. We research the quantum market. I'll provide like expert testimony or expert advice to companies or individuals that want to work on quantum computing. It's fine. I could be on a board. I could work with young startups. We ourselves are a young startup, and so. But where we make our money right now is we run jobs. We pick analyses. We run analyses of stocks, whether it's up to 100 stocks that you pick, or whether it's entire stock exchanges that nobody picks. It's just whatever's trading in the stock market, traded, not over the counter. $100, you get a consultation. Normally that's after you run a job, right? And by the way, if you run a big job, I'm not going to charge you for the consultation. Or you could actually hire me or the team, which has other employment right now because we just don't have a lot of this. Right? We're happy to, for $7,500, we'll build a model for you. It may take a couple weeks, but it's your model. Run in Python. Be great. Teach you all the tricks. Right? I mean, if you spend $75,000 for 10 weeks, I'm happy to give you the model because that's going to pay my college tuition for my son. So please, if you have a shot, if you have some money and you're in the market, you're trading and you like what you hear, please buy an analysis. You can also buy a project if you want to do more about quantum and consulting and strategy work. But there's also a lot of free information on our website. This is data that we keep current. This is through June 17, how the markets do. So you were wondering, QQQ is up 45%. IWM, which is the Russell's, up 63%. The S&P 500 is up 40% over the year through June 17. And we do keep those updated. Tons of free information on the markets. You can spend all day in that site. You can be looking through links. Negative beta stocks. We love to publish negative beta stocks because some people really make money, really trade on these, really investigate negative beta stocks because they move opposite from the market or independent. Negative but independent from the market. You got your highest yield stocks. These are stocks that yielded more than 15% in either dividends or other distributions over the past year. Wow. 15%. Can you imagine if you bought, 10% in 10 of them, and you could make a dividend yield of, 17%, and maybe it runs forward, maybe it doesn't. But that's tremendous. I know people love dividends. They love clipping coupons, right? But instead of earning 2%, let's earn a lot more than that. We also now are starting to publish our stock splits. So these are stocks that split. So ELP, 10.2 stocks for every one you held before. Tesla, 5 stocks for every one you held before. On the other hand, GLBS, every 10 stocks you had before is now 1 stock. So why would a company do a stock split like this? In many cases, the stock falls below $1. They want to be listed, so they're going to drive their price up above $1 just by having fewer shares. And that's fine. And sometimes these companies that split their stock, it's because it's trading too high. Tesla. I can't imagine Tesla trading at $4,000 a share. What, I'm going to buy 1 share, maybe 2 shares. This way, you break it down a little bit. Maybe I buy some more shares. A stock split doesn't do anything for the underlying value, intrinsic value of the shares, but sometimes it allows you to stay listed. It allows you to stay above, let's say, a minimum. So, again, thank you very much. I really appreciate you guys. If you like the video and you listen this long, please subscribe to the channel. Please hit the thumbs up button. Maybe leave a comment, leave a question. I check those comments every day, so if you leave a question, I will answer it. And I really thank you so much for listening. You take care now. Bye-bye.